Hello, this is Brian Shannon from AlphaTrends.net. Today is Thursday, the 30th of October, 2008, and the market finished with a gain here today. We saw the S&P 500, SPY that is, finished with a $2.67 gain, or 2.8%. And basically, the market recovered what it had lost in the last 15 minutes of the day yesterday. We'd seen, obviously, this big sell-off late in the day yesterday. It looked like maybe we were going to get a repeat of that in here as the market started selling off a little bit, actually a little bit earlier than yesterday, but it still had a bad tone to it in here as this little trend line on the 1 minute time frame was broken. But the market was able to recover, here towards the end of the day, and we saw heavier volume in here once again. So, on a daily basis, the volume was actually a little bit lower, and this market has rallied, a few days in a row, 3 days in a row here, and with the lighter volume, that tells us we've got to be a little bit more cautious in here. On the 10-minute time frame, you can see it's holding up very nicely. It holds these lows from yesterday that we thought would be important, and it's resisting pulling back much deeper. So we were looking for the potential of a pullback down towards that 90 level, and I still think that would be an ideal situation because it would give us a better opportunity to get long. But we may end up having to chase strength in here if this market just decides to turn higher and continue to rally. Let's take a look at that 60-minute time frame. We see in here that this little trend line is still intact. Obviously, this downtrend line. We've seen also the potential up here for a little resistance, and we've got this support in here. Let's go back to that 10-minute for a moment. We have that 5-day moving average is coming up, so that's good to see. The 5-day moving average continues to advance in here, and we've got a primary downtrend. So trading these rallies is you got to be prepared for massive volatility. And today, I didn't even trade the last 45 minutes, which was unusual, but I just didn't have it in me, I guess. But it just, it was too choppy in there, and I think that was a good decision here. But you can't be looking for every single move. No one catches every single move, but we're still within the confines of a downtrend, obviously, and money management remains the most important thing. Maybe we get a shock on the open and it comes down towards this level. And there, I think it would make sense to possibly, look for a little bit of stabilization above the 1 minute VWAP. If this were to happen, it's a total long shot, but to look for a little stabilization above the 1 minute VWAP and then be a purchaser in there, because at that point, perhaps the buyers would come back in and retake control. I'd outlined this potential for an inverted head and shoulders pattern on the Nasdaq, but I'll put it in here as well. It's a little bit sloppy, obviously, but something to be aware of, potentially bullish. I usually don't talk about this. In fact, I rarely do, but I wanted to point out where the heck is it? Hold on one moment. Okay, here's the chart I was looking for. What this is the number of declining stocks, and in light gray here I've got the number of declining stocks, and then I've got a 10, 20, and 50-day moving average. What we saw here recently was that 10-day moving average of declining stocks was actually less on that last retest of the lows, and it's been deteriorating in here. Another way to look at it, obviously, is to look at the number of advancing stocks. So here on this chart, I've got a 10, 20, and 50-day moving average of the number of advancing stocks. This looks like it's about to break a downtrend line and a little bit of resistance. And you can look at this, in fact, as an inverted head and shoulders pattern. So there's reason for a little bit of optimism in that the number of advancing stocks is making higher lows and higher highs in here. And this is a daily time frame. Let me just pull this up so we can see the scaling a little bit better. But the number of advancing stocks is increasing, and that's bullish, obviously. So the trend seems to be slowly changing in here, and but price is the only thing that pays. We've got a low volume rally in here, and we're still in a downtrend, so you can't get carried away with the optimistic scenarios. Let's take a look now at the oil market. Oil was down $1.90. As we saw yesterday, it got back above the 5-day moving average, and what I've done in here is put a 10-day moving average in there as well by doubling the value of that intraday 5-day period. So anyways, we had seen this market market yesterday advanced. I said basically I think getting back below 54 might be a problem. Still no reason to be long in oil, and I'm probably going to talk about this a lot less frequently, as is also the case with gold. But let's take a look at gold because it looks like it's backing off, not able to make it up towards that declining 50-day moving average. So continue to be very cautious with gold. It is in a bear market. Let's take a look at the Russell 2000. Russell 2000 was up 5.6%, and this one actually made a higher high than what we'd seen yesterday. So we're seeing a little bit more strength in the Russell versus the S&P 500 and in the NASDAQ. So perhaps this market's leading us a little bit here. We were looking at the 48 level as an important level of support, and that's where we have that rising 5-day moving average as well. I think that if you're involved here on the long side, you want to look at the definition of trend. If you're swing trading this, higher highs and higher lows, I would say here's your most important higher low right now, which is at about 49.25. And this market looks like it's continuing higher. It's broken this downtrend line, and I think the next potential level for it is this prior support in here and the area that it gapped down to on about October 22nd, and that's approximately 52.25 or so. So the Russell 2000 is acting a little bit stronger, and if you're more aggressive, even use these higher lows in here. But on the 1-minute time frame, we saw that test of the daily VWAP. Once it broke above there in the afternoon, it pulled back to it twice, but found buyers and finished right up at the highs for the Russell. Financials were up 54 cents or 3.7%. Looking at a 30-minute time frame, we can take a look at some of these trend lines that have clearly been broken, and important support remains down near about that 14.25, perhaps even down towards about 14. So 14 to 14.25, as I had mentioned yesterday, that's the important level of support for the financials. The semiconductors were also one of the stronger groups. These guys were up 5.2%. The SMH gained 1%. Again, these gains are coming on lighter volume, so some kind of pullback would be nice to see here. It would give us a better risk reward for new entries, but if you're long, it's making in the 10-minute time frame, we've got these higher lows right here near about $20 a share right now. And as far as potential resistance goes, let's take a look at this. Trend line has been broke. We've also we're right up against this level right here. So perhaps we were extended a little bit too far for it to make much more upside progress right away. Maybe another scenario is we gap higher tomorrow. If that's the case, we gap higher, then you want to keep your stops real tight, because then we could reverse, maybe begin to pull back next week down towards these rising 5-day moving averages. The point is, I'm not trying to throw every scenario out there, but I want to make you aware that there's a lot of potential scenarios of what can happen, and you have to be prepared for each and every one of them so you can anticipate, here's what I'll do if it gaps higher, here's what I'll do if it gaps lower, here are the things I'll look for to make sure that I can get on the right side of this thing when the market speaks to me and tells me that it's time to be a buyer or to be a seller or to be on the sidelines and cash. The NASDAQ 100, the Qs were up $1.06 or 3.3%. Let's take a look at that 60-minute time frame. Let's look at the 30-minute time frame rather. We've still got what did I want to look at? Actually, I wanted to go to the 60 because I wanted to take it off of this high here from September 19th. And you can see where this trend line hits right here and right here. So it's still battling this downtrend line and this prior resistance right here. I didn't draw that line straight, so let me just take that straight across. We can see that level is a little bit higher, up near 33.5. That's where the next potential level that you would likely find sellers would be. It doesn't mean that's where you sell. It means if you're long, you tighten your stops as the market gets up near that level and look for a reason to to maybe move to the sidelines if you have profits built in. The volatility here at the end of the day, I think a lot of people were nervous that we're going to see a repeat of what we saw on Wednesday and Monday, which was those final sell-offs. It broke down. I think it was more nervous selling, and then the buyers came back in, also in here with heavy volume. So we've got a mixed picture. We've got a market that's clearly still in a downtrend, but the shorter-term time frames are beginning to improve somewhat. And I think you can look at what you want to look for is pullbacks down towards support, maybe near that 5-day moving average, 30 3/4, 30 and a half or so. And risks remain high, so don't allow a few days of profits to let you become complacent.